So I guess I'll start off by doing a show of hands for people who are involved in retail media in any way, shape or form. So probably, I don't know, 20%, 25%. So for those of you who don't know me, I came across to Australia about 16, 17 years ago, working in the search area, and then through the Google years when me and Andrew got to work together, fortunately, I rode the search wave, then onto the social wave with YouTube, etc. And now I feel fortunate enough to be now part of the third wave of digital advertising, which is retail media. It's sort of come from the US and Amazon in particular, and then it's sort of swept across EMEA. And then for my company, Criteo, then we've just started to lean into it locally, although Andy at Coles and Cartology, etc., have been doing this for some time. So what I'm going to sort of take you through now is going to be centered around digital retail media as opposed to traditional sort of gondola end and that sort of retail media, which has been around for years. So I know there's a lot of people who are very, very numbers focused, so please bear with me. Not every single stat you'll sort of maybe understand or you'll question the methodology on, but this is a large panel of about 44,000 campaigns, retail media campaigns that have been run across the world, about 2,500 brands involved, and the 220 or so largest retail customers we have across the globe. So we try to sort of pull out of the data some of those insights to share with you. And it's interesting, Joe was talking about that sort of the murky middle. What I want to take you through is this same concept that existed in search and social, etc., which is let's focus on always just the last click and the outcome, because that's the easier bit to do. But to just see how much this activity in retail media is affecting metrics across the funnel, and also just for us to think about today, like what should those be, especially as more and more of our lives and the people in the audience will get more and more involved in retail media, and your expertise will be needed to help brands and agencies figure this all out. So that's enough of me waffling on. If I can get this to work. So we've already done me. So just a quick one about Criteo. I know many people in the world here will have understood and come into contact with Criteo through retargeting, which is our background, very much sort of machine learning, AI-focused retargeting. Now we're very much focused into the retail media space, which is building on our previous expertise in computer-driven formats and less human involvement. And as we lean into the retail media space, we then sort of encounter the old world of trade marketing and retail, and it's shoving things on the shelves and out the door. And that's that sort of is not always the easiest thing compared to, let's say, search ads and online conversions. So you've got the retail media side of our business. We've also traditionally had a DSP which accesses the open internet, so off-site ads, and those can come together for a retailer being on-site sponsored products, on-site display, or off-site display. And through our connections with all the different API partners, then we're able to not just help retailers make money out of this world, but also connect them to other sources of demand, be they from agencies or brands from around the world they don't necessarily have direct connections with. So when you think about retail media success, what are those metrics? What are those things that you really care about? So obviously you care about sales. That's sort of bottom funnel click activities. Excuse me. How do I acquire new customers? And what are the value of those customers? How much does it cost to acquire them? And then how do I keep them and make them loyal? And how do I increase lifetime value of customers? So some of the metrics that you might want to think about, impressions, return on ad spend, average order value, incrementality, that comes up again and again and again. Omnichannel, so the online activity, if you're looking at something like white goods where lots of research happens online but the purchase happens offline, what's the link between those two? Cost per acquisition, do people come back and purchase again and again? What insights can I glean? And this is becoming really, really sort of a pointy thing for brands and agencies. They're saying, what results am I getting back for my ad spend? And retailers are having to respond to that and make sure that they can give them, compelling data. And then what's the value of the partnership between a brand and a retailer? Traditionally, that's been driven by the trade team and those relationships which go back decades. But what's the value of that partner versus another one, or what's the value of that channel or format versus another one? So as we know, and harder to measure, but brand awareness goes a long, long way in the world of marketing, and it influences the bottom of funnel metrics and the ability to convert customers and to generate sales. And so what we looked at across these 44,000 different campaigns is when people advertise, so having control groups, people advertise to, not advertise to, campaigns that were off, campaigns that went back on. In that bulk of activity, we looked between Q2 and Q3 last year and said, okay, when you go and advertise in a retail media environment, so let's say online sponsored products or display, then what's the effect on organic sales? So not those sales that were generated by that particular campaign and clicked all the way through, but people then subsequently looking for that product and then clicking on it and purchasing it. And what we saw was, unsurprisingly, that if you go and advertise, it does create a reaction, and it does get people to come back, which is more in that awareness and consideration space than it is down the bottom of the funnel. And it's a reasonably linear relationship. The more you spend in terms of online and offline digital ad spend, the more people will come and buy your products in-store or online organically. So not a huge surprise, but good to see that there is actually a correlation between the two. Also, we know that retail media delivers in terms of what the perception is of retail media. So when we speak to agencies, so this study not only looked at a sort of bench exercise of data, but we also spoke to agencies and the brands and the retailers. And about 8 out of 10 of them said that they found that retail media campaigns were a lot more effective than many of the other channels that they were using. And often, in many cases, this is happening for the first time, or they're relatively new and immature to this environment. And obviously, as it goes throughout the year, there will be certain peaks and troughs of spend and ROAS. But broadly speaking, the level of return on investment they found across all different areas of the funnel, they were very, very sort of happy with. And the ROAS that they were getting was superior to many of the other channels that they were using. So good to know that the perception out there is positive, and the brands and agencies feel this is a space to lean into. Interestingly, when we look at like the share of category, so let's say you're selling a certain shampoo, you've got 10% share of category. When we ran a campaign with the brand and the retailer, then at the end of that period, compared to other channels, there was the highest uplift in increase in share on category, particularly considering the amounts of money and investments involved. And we saw up to about 60% increase in share of category when people were advertising and running a retail media campaign. So if your natural share of the category is 10%, that then lifted to 16%. So not an insignificant amount of uplift. And if you consider the amount of investment you'd have to put into another channel, or let's say gondola ends or in-store screens or TV, et cetera, it's pretty impressive to be able to get a 60% increase in the 2 or 3 weeks that you might have run your retail media campaign. And so therefore, the overall, when the brands look not just at, I guess, the activity, but when they dig into the insights and they get the results back, they're really, really happy with them, which is why this has become such a big buzzword in the industry and such a big, I guess, level of excitement and activity that's being drawn towards retail media, because the results are impressive, the actual sales results, the share of category numbers are impressive, but also that the brands and the agencies themselves feel they're getting good value for money and something they want to lean into. And certainly at Criteo, where we're working with partners locally, where we provide the technology, the agencies and the brands are coming to us and asking us, how can we help them more? How can we give them access to more inventory rather than less, or questioning the value of it at the moment? Interestingly, and I guess probably all of us are so I know, cynical in marketing that we often think that people don't click on ads, but luckily lots of people do click on ads, and those who do click on ads tend to be a bit more open-minded about what it is that they're looking for, which makes sense, because I think if you don't necessarily know exactly what you're going to buy, you're a bit more open to the idea of other products and services that are being presented in front of you. And when you do that, you're probably less value conscious, and you're more likely to be open to the idea of selecting other products. And so what we see is not only that ad clickers spend more, but they also, per unit and the total order value goes up at the same time. So it's not just sales, but it is sales. At the end of the day, there's a lot more products being added to baskets. So whether it's units you care about, whether it's actual, the value of each unit or the total value of the basket, all those things go up. But the metrics that sit behind them also go up. So the conversion, the interactions on site, etc. And so what we see is an increased overall revenue per user, which is the really important thing for many, let's say supermarkets where there's lots of repeat purchase, to be able to have ads that also help bring back people and loyalty and add to basket and increase the number of sales over time is really, really important. As I mentioned before, it's really hard to measure the sort of activity between what happens online and then translates to offline sales. And so for many categories, let's say hardware, you might go on, on a website and then look to see whether that particular nut, bolt, screw, whatever it happens to be, is available, which aisle it's available in. But fundamentally, you'll turn up and get your sausage sizzle and then go into the store and buy it. And as long as you can connect some of that data together, of which many retailers do, and they import the data into our system to be able to do that full funnel attribution, then you see an increase not just in online sales, but also offline ones too. And so in this particular study that we looked at, then we saw a 40% increase in the amount of offline sales that happened as a result of just purely online campaign activity. And that's important as well because it's vital for the retailers to be able to know that it's not just footfall through the door, that there is a lot of research, there's a ROPO activity going on where people are making decisions online and then turning up in store. So it's an area to make a decision, and if the retail media campaign provider, so in this case a brand, let's say it's Makita, is driving people in store onto the website and then in store, that also helps the retailer not just get money from that campaign and being a publisher, but also from selling more units and as we saw, having a higher basket value and higher loyalty value. And so when we looked across the broad spread, this study, we looked at data going back to the start of 2021, we saw that on average, the brands who were involved and invested in retail media were seeing more shopper loyalty and therefore coming back again and again and buying fundamentally more products. So this channel, because of the relationship that the user has, then going onto the retail website, a retailer that they trust, then with a product that they're really interested in, then it's unsurprising then that the loyalty starts to build and that retail media proves that ads can actually assist the customer experience, can assist loyalty and not just be a flighty campaign. And if you started from the sort of, the open internet, you go onto Google, etc., and you type in, you're looking for a search, you end up on a retailer's website. You'll only go to that retailer's website if you already have a propensity probably to like that retailer and believe and trust in them. And if it's the brand that's paying for that activity and driving it through, you also have some affinity with the brand. So therefore, unsurprisingly, you can create this virtuous circle of where the brand is funding the activity and increasing loyalty to the retailer. The retailer then is able to continue to advertise and talk to that customer and bring them back. And then that has advantages for both parties. I think the important thing is, and this came up in Andrew's segment, which is about not just focusing on last click and not just focusing on just those outcomes, but to be able to, for each of those either brands or retailers to be able to understand exactly what's happening, they have to have really good insights. And I would say probably some of the challenges in retail media, like in the early days of programmatic, is it tends to be sort of insight and reporting light, but ask you for money heavy. And so if you enable and empower people and empower the brands and agencies to be able to run the numbers, then people will come up with their own different versions of how to do full funnel reporting. But you need to have that technology, you need to have the reporting in place in the first instance for that to be able to happen. When that does happen, and what I think the trend we're seeing, and Andy Coles can confirm or deny this, but there is more requests coming from brands, particularly the global brands, who are becoming more and more demanding about what sort of insights and reporting they're expecting out of their investments in a retail environment. But when they do get them, and when they are able to look into those figures, they're really, really happy. At the end of the day, this is something that the brands want. They're the ones who are sitting on the money. They're the ones who need to see the return on investment, short, medium, and long term. And so it's great to see that the technologies and the abilities of all the people in this room, for example, are going to help those brands get to the answers that they really, really want. And the good thing is the brands are really heavily leaning in and really excited about it. So unsurprisingly, the brands are saying they're prepared to invest more. So they're getting more, they're excited about this opportunity, and therefore they're leaning in. But also, the retailers are noticing that previously, and the brands, they're noticing that previously before there was very much a trade relationship. There'd be a talk about pricing and product positioning and all those sort of things in that trade relationship, and then old traditional sort of retail media investment was going in. And sometimes, because it involves price and negotiations, those can be somewhat adversarial relationships, and there's a request at the end of it for like a JBP, an amount per year that's invested. Now we're in the world of digital media that's much more accountable, there's much more interest and understanding, expectations, etc. Then the partnership between the retailer and the brand is actually coming together, not moving further apart. So the brands report particularly that they feel that the relationship they've got with the retailer is improving over time rather than getting worse, even though it's becoming more and more accountable. And as I think was mentioned earlier, there's a sense, I think, in digital that you have to be more accountable than the other channels because you can measure it. Well, that actually is leading to better relationships overall. So what does all this mean? This is a very large presentation I've cut down for the benefit of the fact that we're going to have a panel discussion and the fact that my friend at Meta, like Meta do, eat in and take an unfair share of the allocation available. Then, thanks, Andy. So, it's tempting to, with all these things, when you can measure something, you measure a thing at the bottom of the funnel, the thing that sort of just drives the sale. The chief financial officer is saying, what am I getting for this money? And you come up with a report and you say, well, it's this many sales. But it's so much more than that. This report is also so much more than that, so I can take you through and share it with you at another time. But most importantly, I guess make sure the objectives of the campaign take into account upper funnel investments. They take into account things like display. Display is often seen as being an assist channel, and therefore it's often hard to then link it to the lower funnel. But when you're managing all these campaigns in a retailer's environment, either on-site or off-site, as long as you've got that full funnel reporting, you are able to see the impact of your display activity on eventual sales for either same product, same category, etc. Make sure that the investments that you're putting in to retail media are really reflective of the results that you're getting. At the moment, there are brands who are sort of leaning in and have a sort of, I guess, trade view of the world, which is I'm kind of compelled, and this relationship has existed for a very long time, to invest X amount per year, and then it's a bit of set and forget. This is very much like the world that we've all joined in digital, where it's every campaign is assessed, every piece of investment is assessed. But make sure that as we do that, we are capturing the full value and not just those last clicks. And then also, the thing that happened like in the early days of search, this isn't a flighted activity. Yes, there might be an Easter campaign, an AFL grand final campaign. Of course, there'll be flighted activity. But there are people on retailers' websites every single day, and therefore those activities and campaigns need to run all the time in the background, as well as the Black Friday events and those other seasonal activities. So that's the sort of background to what I wanted to talk today about. And I'm going to have three esteemed people up on the stage with me just to talk through some of the detail and some of the challenges behind it. Because it's easy to look at the reports and say, it's all great, give more money to the retailers. But at the end of the day, there are challenges around pulling the data together, actually making sure that everyone's happy that the stuff does actually return an investment. So I would like to welcome up my three amazing colleagues of Andy Ford from Coles. Choose one of the three seats. And we've got Roger Dunn from Diageo, and we've got Hope Williams from IPG. Thanks, guys. Okay, glasses on because I'm that old now. I'll start with I guess a broad challenge. How are retail media campaigns being measured today by you or your company or the people you represent? And from that, what are the challenges that you're seeing right now and the limitations? I'll start with you, Roger.
Yeah, thanks, Colin. I guess I'd imagine a lot of campaigns are being tracked and measured within the platforms that they're being run. And while that's a great place to start, as we've seen with the report, there is this ROAS trap where if you focus on ROAS, you're only really looking at one dimension of it. So I think the way we're looking at it, we've got a bit of a framework around measurement where we'll definitely look at the platform, we'll optimize within that space, but we'll also look at much bigger, longer term measurements and models to do that. We work with some great partners like Game Theory around our MMM modeling, so we have that longer term view that allows us to allocate between channels. And then in the middle there, between the platform and the longer term view, we've got incrementality and some of that multi-touch attribution and supported by econometrics rather in that space. So we've got a few different views, and I guess it's about triangulation and making sure that you get to the right answer because there isn't just one way to do that.
Cool, thanks. Hope you obviously represent, I guess the interests of the brands and being an agency looking at this on behalf of like multiple brands. How are you guys looking at measurement and impact?
working across multiple brands, I would say the majority of them are looking at ROAS. They're looking at revenue. Anytime times are getting tough, that's just what the numbers go back to. So we're working really hard with our brands on trying to shift them from, and Joe mentioned it, from converting demand to actually generating demand. So looking more at the mid-funnel metrics, which you'd think would be simple, but it's a long conversation. It takes a long time. I think as well the limitations we find with some of the retailers is they don't have the sophistication or the technology to be able to measure things like share of search. So you have to use a third-party partner, or it's just not available. So we don't have access to that kind of data. But yeah, definitely they're in the ROAS trap at the moment. I would say majority of our clients that are in this market. Yeah.
I guess the follow-up to that, is it because of the lack of available metrics, or is it just the simplicity of just asking for?
Yeah, good question. It's couple of things. The teams that we're working with, so if we're working with an e-com team or a trade team, they have the lower funnel as their core KPI, like that's the job to be done for them. And then I think that like often we find quite a disconnect between the brand teams and the trade teams. So obviously we need much better integration across clients or across brands for them to start sort of talking to each other, and that's obviously what we do as an agency, is try and help them. And then yeah, you've just got retailers that have a limitation in what they can offer in terms of their metrics, or they don't have the right technology available. You know, I don't think it's really retail media if you can't measure back to a SKU or have closed loop attribution. And there's some offerings out there that are saying that they've got a retail media offering, you can't do that. So it's, it's sort of a mixed bag in terms of limitations versus client. Yeah.
Cool. Andy, what sort of, I guess, challenges are coming your way, and what expectations are there from the brands and the agencies?
I didn't think I was going to have to speak after your presentation, to be honest. Apparently retail media is up and to the right. Look, I guess as someone who has to lead our measurement offering, we have put across like 2,000 different suppliers, possibly more. So we have a variety of needs, and so what people measure is very much dependent on a number of factors: who they are, their sophistication, their level of need for data, the types of campaigns they buy as well. So we have a lot to cover in that regard. But, you know, the sort of the top end of town, the Diageos of the world, and kind of and hope building out what is the retail media offering and agencies is absolutely. We want to be at the pointy end, but also we've got to satisfy and cater for the very large volume. So we are obviously focusing on closing the loop, but we do it in a range of ways with varying degrees of sophistication, just to provide what's relevant, really. So yeah, we are trying to address it as across all of the metrics we possibly can. The majority, the title here is very much focused on an ROI, but we are trying to reframe ROI, I guess, a little bit around kind of the value you get for your investment. It's not just about a 4-week, incremental revenue over cost. It's a lot more than that, as you went through in your presentation.
Cool, thanks. Where do you see the role of, let's say, digital retail media versus the whole picture of retail media? Is this just the accountable channel, therefore it is going to be held to account, and the other ones are less held to account? And how do you, if you're a brand and you've got the choice of being, gondola end, digital screen, outdoor, Google, etc., how do you make those, choices? And is there enough information for you able to compare one with another? Roger.
Tackle that. I guess what we're seeing with retail media and that new definition of what was trade marketing is the digitization of it, and we'll see that go into stores as well. So we'll have digitization of screens on trolleys and end of aisle gondolas. So I think as it becomes digitized, obviously it's inherently a lot more measurable. And if you tie that up with a loyalty scheme as well to see what's happening in the sales behind the scenes, then you can really tie that together. I guess a nice example of that is thinking, if you have this digital screen in store, you can probably measure that on every stage of the funnel if you still use the funnel. Obviously we use customer journeys, but just for the sort of mental model. People looking at that screen, you can measure reach and frequency. That's an awareness job. You can then probably measure new to brand sales that come from that screen, and that's consideration. And then over the period of the campaign, you can probably see extra sales and conversions. So that's a conversion driver. And then over the next 3 months, you've got maybe sales coming in over the duration, which will be a sort of loyalty metric as well. So even on that one placement in that one screen, if you can measure that, then you've got all these different metrics. And I think that's where you have to, choose the right ones, but probably consider all of them and think, that's doing a few different jobs here. So I think it's a really, obviously, interesting space as those become more available and inherently measurable. It'll be.
You make it sound so easy.
Well, that's your job.
So then, Andy, when those brands come to you and say, well, "What did I get? How does this compare?" You're trying to sell me a homepage takeover. You're also trying to sell me a digital screen, a radio, etc., etc. How do you respond to that? And do you like the fact that they want to compare channels, or is that actually a massive headache?
It's a massive headache, obviously. You say I've walked past a digital screen, but you've also just walked past some physical thing on a shopping aisle that's just fallen down probably as well, and then we've sent you an EDM, and we have to link all of those things because our very important suppliers, clients ask us to easily work out the ROI. So it is not easy, but it is important. So what we're trying to do is kind of offer a range, as I touched on, a range of different types of measurement. We want to be able to say, like, the macro view of your total ROI of your campaign investment was this, and we've got a couple of techniques we'll use for that. And then we want to be able to drill down into a single channel and say what was the incremental on top of the other. And that's kind of how we answer a bit of both. It's like, well, if we can start setting benchmarks on those individual channels, that's great. We can optimise towards those a bit more, but we will need to be able to answer that overall return question as well. So try not to get in a radio versus mag versus in-store question too much. I prefer to be in a bit more of like, well, if we were to use this, test this alongside our above-the-line campaign we're doing or promotional activity, I think they're probably better conversations and levers to pull.
And so, Hope, you're kind of, I guess, in the middle because you're being asked often by brands to, take care of their maybe more upper funnel activity, and then there's this, trade activity that's going on either out of sight or you have relatively little, view on. How do you sort of stitch all that together and to give a brand a sort of sense of actually you should spend more on this channel versus this one?
Depends on the brand we're working with. So Goodman Fielder, for example, we do all of their trade planning and buying through the line, so brand through to trade. So we do have visibility on that, and we make sure that we connect that internally. I had the pleasure of working with Unilever in a contract role last year, and they are really good at integrating their teams from a trade sales perspective through to the marketing team. So you don't have, we did have the problem, but you're starting to see these teams, I'm sure Diageo is probably the same, given it's a global brand, where you don't have that issue as much. I think it's also can be a really touchy conversation. So if we are managing the brand and we want to talk to them about trade opportunities, it's a tough market at the moment. I think people are concerned about their job security, and so it can sometimes cause a bit of, you have to tread carefully depending on the brand that you're talking to in terms of helping them manage what that trade allocation looks like, or helping them bring the media agency rigor into their planning. We've had some that are really receptive to it and others who aren't at all. But I think what is probably lacking is access to data from an agency perspective, like API integrations or like simple exports, so that we can start to visualize the data ourselves and be able to say, down to a format level or a placement level, like, this is actually really effective. Like, don't just listen to your supply partner, no offense, or your retailer that's telling you the floor decal works. Let's actually look at the data and analyze it properly and understand of those placements what is effective. And then, so that not outside of measurement, like, you need the planning up front to be effective, to get the best measurement, make sure the job to be done is really clear and the KPIs are really clear. But yeah, I definitely think that the access to data from an agency perspective really helps us to have that full funnel view, and if the retailer can't provide it, at least we can have access to it by stitching all our data together.
Thank you for that. So somewhere in that, there's you highlighted some challenges, and some of them are just actually very pragmatic, which is just how do I get access to the data, like, and regularly and easily, as opposed to phoning someone up and getting them to send an Excel spreadsheet. Are you getting any real pushback from retailers in providing that, or is it? Do you think it's more of a sense of they don't have the technology, or is it more a sense of that's just not our strategy or policy to share that?
I mean, I think Andy's probably better placed to answer that question because he might tell
You
me
go
off if I
first.
say the wrong answer. I think it's probably a mix of both. I think some of them just don't have the sophistication. I think some of the, even like the e-com back ends aren't headless commerce, like they don't have access to be able to provide the data that we would actually need and pull it from their systems. Some of them are quite antiquated and they're already on their journey of working with and I'm obviously not talking like a Coles or a Woolworths, they're already on their journey of working with, a consultant to make sure that they are set up for success when it comes to even e-com and then looking at retail media. And then I think that I think that there's probably more things to fix before an API connection is available. And I'm thinking back to a meeting that I had. It's making sure that their data, they trust it themselves, they can vet it before there's a direct plug-in to an agency to be able to have access to that data. And I think that that's probably one of the main limitations with grocery, maybe? I don't know. Andy?
I mean, I spent the prior 10 years getting yelled at for being in a walled garden, so I'm used to this kind of conversation. So, look, I guess for me it's twofold really. It's absolutely we want to be providing that right level of aggregate data out to be accountable. It's more about the scale at which retail media is moving and being able to offer that. It's like it is possible. There is resource. There are great platforms like Criteo, all those kind of things that can get this information out. It's just what do you prioritise and for whom? And as the agency and brand and trade media offering combines and converges and moves, we will need to go on that journey with them quite quickly. But right now, the immediate ask, if you ask who is yelling at me the most, it is a major supplier saying, "Can you just get my reporting done on the incrementality of this particular campaign?"
I was going to come on to that. So incrementality is something, even at Criteo we hear all the time, is if I'm spending this money, is if I rank organically when I'm looking for tomato ketchup or whatever, why should I advertise? All the questions have existed in media forever, but now you're at the pointy end because it's sizable amounts of money now. It's not play money on the side. How are you looking at incrementality and being able to prove that generates more sales?
Look, when it was. So we started how long have you got? So we started our measurement journey about a year ago, which coincides with about when I joined. But
Funny that.
Yeah, I know, right? So what we have, we need to quickly scale in measurement offering, right? So we had limited kind of capability. We had a great partner in Sakana, and I can see a few of them in the room over there. And what we needed to do is get some level of attribution out, right? So it had to be easy to scale and provide some level of usefulness. So it was great. So we offered sort of pre-post measurement, but we heard very loud and clear from everybody they wanted incremental. So we've gone on and we've launched incremental measurement products. We have a sort of match store pairing one where we can test non-addressable media, and then we've got a more customer-led one where we can do addressable media as well. So we are putting them out there. What we're seeing, though, is kind of with that increase in sophistication of those measurement products comes an increase in complexity. An increase in complexity in how you set it up. I know Roger just thinks we'll walk through the store and Minority Report scans everything and we see it. But that ain't the truth, right? So, we need to, like, setting up a store for holdouts, bar with physical media, radio, that's quite complicated. So we're sort of realising there's this gap in the middle as well, and this is kind of where I'm going to coin this notion of thinking incrementally. So, like when we take things like a pre and post analysis, how can we account for more variables in there? How can we control for those? And so we get a bit nearer to an incremental number or attributable number. And then, looking at when we've got multi-channel campaigns across our assets, it's like, well, if we can't actually do a randomized control trial, why don't we look at forecasting and more regression techniques? Again, thinking about incremental. It's not causal, but it's just trying to move a little bit more to that space to answer the questions. Because if we can do that, then we think we can probably, as I said, we've got thousands of suppliers. We can start matching the right measurement technique to the right campaigns. That's kind of how we're viewing it at the moment.
Rog, you make it sound so easy. So incrementality, what do you want to see from a retailer or an agency representing you?
I think not everyone's as advanced as Andy and Coles 360. Obviously, there's a lot of development there in terms of measurement solutions. So across the board, I think what I would like to see as a brand is more incrementality that's just easier to run in platform, that's available, and potentially even, as Hope mentioned, some of that data available to bring back into our systems, because we have our own, commercial data, we have our own or other campaigns that are not with that retailer that might have impacted what happens there. So the more that we can handle that and do more with it in-house, and obviously with other agency partners, then that's really helpful. But yeah, and we look at retailers on a sort of maturity level in the sense that the most basic data we want is campaign data. And so there's hands-on metrics from the platforms. Then it might be a level up, which is sort of new to brand metrics, maybe halo effect, where you advertise one product and sell a similar one. And then all the way up to that top level, which is clean rooms, where you're, being privacy and security compliant, but actually matching audiences and understanding, okay, what's that journey that customer's been on, and what are these new custom segments that we can target. So that's obviously almost the nirvana, sort of highest level of data and measurement, but we're a long way off in a lot of cases with retailers.
And so as I look at it, and coming from the trade angle and the relationships that a brand would have directly with the retailer, the expectations probably from those teams are somewhat less than the marketing teams who have people like media agencies who for years and years have added that value and done all that really hard work of stitching it all together and being able to come back and gone, the answer's this. What do you see as the role of media agencies in this environment? Because traditionally it's been marketing, trade. You mentioned Goodman Fielder, pulling it all together. Where do you see the future for Holco media agencies in particular?
This is a controversial question, because I think that there's some people who don't think agencies should be involved in this process. But I believe that we should play the same role we've always played, which is we have a level of rigour. We hold suppliers incredibly accountable. We analyse everything. We use data and insights to plan, and we ensure that brands are growing. And so if we can pull together teams internally, which is probably easier said than done. I've been in many meetings where clients have introduced themselves to one another that work on the brand side or on the sales side. If we can act as the sort of the in-between, the conduit, and we're connecting everyone and making sure that, we have what we call, I've forgotten the word. It's like a full agency landscape would show up to a briefing. We want to be doing that with the clients as well, and we've started to move forward in that area with a lot of clients. So yeah, I think for us, it's the role of agency doesn't shift. It's just that there's now a whole new, you can't even call it a channel. There's a whole new world that we can buy media into, which is the retail space. And I think that we're also really big on innovation, right, at media agencies, all the holdcos. And I think that we, as a collective, can help to drive this industry forward in a way that potentially hasn't happened in the trade space to date.
Thank you. So I'll go through each of you. So first question then, or like penultimate question and the last question is, any great examples of things that you've seen out there that are really taking the measurement space on with retail media? And then, another one for that is there one thing that you think this audience should walk away with and remember? And remember Andy, Hope, or Roger. That was a genius piece of advice. Andy, no pressure.
I mean, one thing I'd like to say is we're very lucky to have Roger Dunn on the stage. He's the busiest man in media, as far as I know. I guess, progressively, I'm going to have to, obviously put it out there that the Coles 360 Impact Reporting Suite is progressive measurement in retail media. So I have to make that plug, obviously. Look, I hope touched on earlier, Unilever pushing this a little bit, frameworks around how they align certain types of measurement to the types of hypotheses and questions and campaigns they're doing. PepsiCo are really driving a very, very robust data strategy, really trying to live out those Ehrenberg Bass principles and how they execute that across stores as well. So, and then some of the other sort of the leading, I guess the larger, not leading, CPG companies are really starting to ingest that data into their MMM models as well, which is my probably next year's job I've got to figure out. But they are certainly trying to figure out how they get that in there and how they combine all those dollars.
I've already plugged Unilever, but Maria's here, so I'll plug them again. I think any global brands seem to be doing pretty well because they've obviously got the time advantage from working with the US or the UK. The Unilever measurement frameworks are definitely are really strong. I have seen some FMCG brands globally that are very disconnected in the sense that they have many agencies running their activity. And I think that that's effective if you have good communication, but it can also let you down in terms of your brand growth and outcomes. Are we doing the takeaway now as well?
I forgot. You go for it.
Do you want to do yours?
No.
Okay.
No takeaway.
We need time for questions too, people. But
Takeaway. I think, based on the fact this is the ROAS Trap, I would be looking at retail media as a compass to guide your customer. So, starting with, and Rog mentioned this, starting with the upper funnel. Obviously, we're not linear in how we shop, but making sure that there's consistency in your messaging, using retail media as the compass to do that, whether that's brand awareness in store, online, search, whatever that might be, because everyone's obviously shopping differently, but they will remember your brand if it's consistent.
Good advice. Rog?
Great. One interesting pilot we ran in Europe was combining attention metrics with basically Amazon DSP, so running Amazon activity, commerce-led, driving sales, but then applying attention metrics on that and optimizing towards that too. And that drove really good results for us. So that was a really interesting test in terms of practical ones. And then the piece of advice or the leave behind, I guess, would be for retailers and the platforms, it would be to offer more incrementality, sort of measurement solutions, easier to use, more live, kind of up to date, rather than sort of post-campaign. And then on the brand side, I guess it's more about that triangulation of measurement. So it's in-platform measurement, it's at, incrementality and brand lifts, and then it's the bigger piece with Triple M. And if you can combine all those things, then that's the right space to be.
Well, it sounds like your 2025 is going to be busy then, Andy, in providing all that.
It's a big list. I've got to get the data to Hope first.
Okay.
API.
So, Jay, we don't have time for questions, or do?
oh yeah.
Oh, JJ, yeah.
We still have gift cards to give away. Can I remind you, or we know what my wife's getting for Christmas? 2 $100 Lux Hoyt gift cards, people, for the best questions. We've given one away.
So we've got 3 amazingly experienced people up here. Like,
can I just start by asking? Can I clarify what is a gondola?
Like aisle ends, like end caps, whatever you want to. When you get to the
end of aisle.
Yeah, when you see the big, Tim Tam.
I actually thought when you talked about gondolas, I had a vision of ads on glass. I've never seen that.
There's other words
Why are we
like
talking about gondolas? Right.
beanies and wobblers and power bays. There's a whole thing.
All right. Just thought I'd check. Oh, thank goodness.
What, if any, use is all of the retail data for brands that aren't in your ecosystems? So they're not a product stock in Coles, but you're sitting on treasure troves of data.
That's a good question.
We access that, and how can we access that? Anything good use case?
I mean, technically, okay, right. Without depends who's from Coles Legals here, which is obviously an area, but yeah, it's just you. So look, obviously the kind of Flybuys data set is a very rich one, and we're very privileged to have it. And one of the areas we will be thinking about within retail media is non-endemic advertisers, those that aren't in the supermarket. Easy examples are kind of like insurance or something like that. They're fairly, and they can be then displayed in our stores as well. In terms of accessing audiences or advertising to them, we just we brought in a company called Flybuys Unpacked recently into the family, which we're very excited about. And so we're thinking about how people can access those audiences across channels in a very privacy-safe way. We're just working through that at the moment. If your question is more around insights, there's there's a platform built, or both Woolies and Coles have via Quantium and Sakana in our case, real SKU level insights on those things. But I guess that's not quite so to take your question about the non-endemic advertisers. So it's dependent on kind of the use case, I guess, but we have to make sure each use case by use case is assessed appropriately on how and whether it's like privacy centric and whether it's in value for Coles and our consumers. I copped out of that one a little bit, didn't I? Yeah.
The other thing to remember as well is retail media is spreading. So the banks are launching media networks, travel companies are launching them. So there's many more owned media kind of opportunities out there for lots of brands.
The Destination Canada and David Jones campaign was really cool. They partnered, obviously non-endemic. but they took over all the screens in the David Jones store, which I thought was quite a nice premium example of retail media for a non-endemic brand.
Any more stunned silence, or it's mid-afternoon, everyone's like, lol.
Here we are.
Just a quick one. In Criteo, you mentioned that you had the offline sales, so your online activity measured the offline sales, but obviously a 40% increase. Because I know previously at Woolies or Cartology, there was a huge work when it comes to the actual scanning of the card to measure the offline sales. So how does Criteo do that with that? Because there's no obviously loyalty card to scan it.
Yeah, so we would rely on the data. I mean, ultimately, at the end of the day, we're providing a technology platform that enables ads to be shown, bought, etc. But we also offer APIs and ingestion sort of opportunities. So if a retailer has a loyalty program, is able to ingest that data anonymized, and so it's not, we don't take in PII, then you'll be able, in theory, you'd be able to match the person who's been looking at Kit Kats online with the person who bought Kit Kats in store using that loyalty data. We can't, in the absence of data being uploaded and matching, then it's difficult for us to be able to say that. We do have our own sort of graph outside of retail media to be able to sort of look at things like email address and other matching properties. But the best way is, retailers have been doing this for a long time, but just to make sure they're doing it for the sake of ads, because if you're Nestle and advertising Kit Kat, you want to see that those people have bought them in store, and the best way of doing that is to access the retailer's data, whether it's flybys or everyday rewards, etc. Yeah, and then you're not going to capture all of it, so you have to sort of decide, what percentage of the data you're capturing, and therefore is it rich enough? If it's 1% of in-store sales, probably not good enough. But if it's 40% of in-store sales, it's a large enough sample to be able to make the correlation between the two.
I'm correct. You've actually rebranded the Criteo ID as Shopper ID, haven't you?
Ooh, I don't know.
Oh, right. Maybe not.
You
I might make that up.
JJ.
Don't quote me.
No?
I should know, because we're releasing the ID Solutions handbook next week,
Okay.
an update. I better check with you, Colin.
All right.
Anyway, any other questions? All right, thank you very much.